Hi, I'm Tim Sustak, Chief Credit Officer with Vizzo Financial, and this is the economic update for November 2016. Today, we'll take a look at some recent economic releases involving the consumer and economic growth, and how these play into the possibility of a Fed rate move in the remainder of this year. In last month's update, we talked about the consumer and the fact that they were really not holding up their end of the bargain in the third quarter. Well, September's numbers showed a bounce back with solid retail sales and consumer spending. Retail sales for September were up 0.6%, supported strongly by auto sales and also by restaurant spending and home-related items. The recent personal spending numbers reinforced the positive feeling coming from retail sales, with spending up 0.5%, driven by, no surprise, vehicle sales. So certainly good news as the consumer finally showed up for the third quarter. The advanced estimated third quarter GDP was also good news, as economic growth topped estimates and came in at 2.9%. This was driven by consumer spending and backed up by exports, business investment, and inventories. Overall, this is a kind of positive commentary we were looking for in the third quarter and welcomed ammunition for those hawks in the Fed that would like to get a rate hike in yet this year. A look at that after the break.
Vizzo is a vision where credit unions thrive in the present and expand in the future. Vizzo Financial believes this vision is possible, and it's our mission to make it happen. For the good of our movement and the service of our members, Vizzo Financial is the future for credit unions.
Welcome back. Last month, we said it would likely take something pretty ugly for the Fed to pass in a rate hike this year. So far, I'm not sure there's anything out there that qualifies. As we said in the first segment, the third quarter turned out to be pretty positive overall. Inflation is still lackluster and not putting any pressure on for a rate hike, but probably is not at the point where it would pull a hike off the table either. Not to get political, but we still have the election coming up, which should be an interesting one. At this point though, we'll just let that play out before we try to assess what that may mean for the economy and the Fed. In any case, based on what we know now, I'm thinking a December hike of 25 basis points is in the cards. The markets are increasingly believing that as well, indicating the probability for a December hike of about 71%, up from about 60% a month ago. Certainly the Fed would like to make good on its projection for a 25 basis point increase this year, and as of now, there just does not appear to be any major roadblocks. Those of you who follow the Fed know that can change on a daily basis so we'll see what time tells. At this point, however, I think it makes sense to assess what another 25 basis points in December means for your credit union if you haven't done so already. That's the economic update for November. Let's take a look at this month's release dates for some of the more important economic statistics. We'll see you again next month for another look at the economy, and as always, thanks for watching Fine Action.